Now I see some faces. Hey. I'm just going to give it another couple minutes, see if we get another chunk of people get added in. So I know we had a lot of RSVPs online, so I'll give everybody a couple minutes to get in here. I think Charles has the best view today. No. Hanging out by the beach.
Mark, I'm digging the bow tie.
It's Bow Tie Friday.
Friday, I like that. All right, got a couple more people coming in. I'll give it about one more minute here and then I'll get started. All right, we've got a pretty full Zoom room going on. So I'm going to go ahead and get started and I'll keep adding people in if anyone else chooses to join in the next few minutes. So welcome to our Lunch and Learn for the month of October. Today, we're going to be talking about financial support and specifically going over child and spousal support and talking about some of the tips and tricks and pitfalls and really just how we can make sure that we've got the numbers right. So for those that don't know, and we do have some outsiders on the call today, Melone Hatley PC is a family and estate firm. We are your partner in divorce, and we help our clients protect family, finances, and futures. So we do these monthly lunch and learn sessions. They're really designed to be for our team internally, but we open them up to the community. So those that are going through this or are thinking about going through this and are looking for some more information on support or whatever other issue we're talking about for the month, they're more than welcome to join us. Of course, there's no attorney-client relationship formed by way of doing this presentation. We're just sharing some information out there to the community. So if you find this beneficial and you're looking for some more information specific to your situation, contact us for a one-on-one conversation. We can get into some more detail. But for today, we're going over some general information. And specifically, I'm going to be talking in reference to Virginia and North Carolina. Those are the places where I'm licensed to practice law. Those are the places where we have offices. So that's mainly going to be the topic for today. All right. So our discussion outlines, some of the things we're going to be going over today are the guidelines, kind of what are they, when are they applicable, when are they not, what counts as income when we're talking about support, deviations, meaning when do we ever go above or below what the guideline says, imputation, if there's a claim someone's claiming they make less money than they otherwise should be, retirement and how that gets factored in on support issues, and then any kind of future modification case. Those are all going to be the main topics for today. So child support guidelines in Virginia, you can do a quick Google search any which way you go, Virginia child support calculator, and you can find something, right? They're out there. The biggest thing that makes the difference is what goes into the calculator, right? The calculator itself is relatively straightforward. You can find the basis in Virginia Code section 20-108.2, and that actually lays out a whole chart and goes line by line of if the parties make this many dollars, this is how much child support will be for one child, two children, three children, so on and so forth. In Virginia, we use the same guidelines for both temporary and for permanent child support. And there's going to be differences depending on the number of custodial days a person has. So if one parent has 90 or more days, and we'll talk about that, then they're going to be calculated according to the shared custody guidelines as opposed to the sole custody guidelines. So they're going to pay a little bit less in support if they have more visitation. Now, one thing that's going to make a huge difference is how you calculate that day and how you count it up, because for each and every, oh, I'm getting some echo here. So for each and every one of those days, it's going to make another little incremental difference in the amount of support paid. So when we're calculating a day, it's got to be a full 24-hour period. If we have a parent that maybe picks the child up after school and then drops them off at school the following morning, so they're staying overnight, but it's not a full 24 hours, that does not count as being a day for child support purposes. So really important that we know what the schedule is and how we're getting to the number of days, because if we have so many half days, those are going to add up and create full days. But you can have widely different numbers based on the same schedule, just in how someone is calculating the number of days. Split guidelines, these are going to apply if you have one parent with custody of a child and another parent with custody of another child, right? So the parties have two children, dad has custody of one, mom has custody of the other. They basically owe each other a duty of support, and most of the time they're going to mostly cancel one another out, and there will be some nominal amount of support that's going one way. Does not come up very frequently because that's a pretty odd custodial arrangement, but there is a guideline out there if you do run into that scenario.
Except for that one brief conversation on the phone. Do you remember,
All right, so calculating income. This is obviously really important. Getting the right number on the top line is going to make a huge difference on what that bottom line figure is going to be. If you have somebody that is a W-2 employee, it's relatively simple to look at their W-2 and say, okay, this is what their gross income is. And that's the number that we're going to plug in on that guideline, on that formula. Now, if you have someone who's participating in retirement, they might say, oh, but that's not, I don't actually make $1,000 a check because I'm putting $300 away into a retirement account. So we should be using my net income. There's no deduction when it's a voluntary contribution to retirement. Certain positions do have mandatory retirement contributions. So certain government employees have to participate, or they have to participate to an extent. And then over and above that is going to be a voluntary contribution. So there can be a deduction only if it's a mandatory contribution. So they have to prove that it's mandatory, that it's within that amount, and then they'll be entitled to it. Self-employment is obviously huge. If you have somebody who's working for themselves, they're getting paid in cash, they're not necessarily reporting everything, they might be making a whole lot of money that they're not necessarily reporting on their taxes. And so we'll talk about some more issues on how to introduce that evidence and how to get that before a judge. But in general, the rule is with self-employment, the gross income of the business is what's being used for child support purposes. It is up to the business owner to prove their reasonable business expenses. So if I'm the one that's seeking support from a business owner, all I have to do is show that top line number and say their business grossed $1 million last year. I would like to plug in $1 million on the calculator, and that's how I want everything to be done. So now the burden shifts to the other side, and they have to prove, well, okay, I grossed $1 million, but I only netted $5. And this is why, because I had to pay for vendors and advertisers and things like that. If they're really only netting $5 a year, the judge is going to have some questions about, why are you doing this? There doesn't seem to be a lot of point. So there has to be a reasonableness element to it. And if they could go out and work a job and make, take home significantly more money, there's going to be a question of why are they doing this business? And why should, the child be penalized as a result of them taking on this venture? But that's where you want to start. You want to start at the top line, gross revenue for the business. Personal injury claims. This one comes up every here and there. So if you have a client who's received a personal injury settlement, they were in a car accident or something like that, a portion of their recovery is probably related to lost wages. So if I'm in a car accident and I can't work for 2 weeks or something like that, some piece of that settlement is attributable to those lost wages. That piece is considered income for purposes of child support and spousal support calculations. Now, it's a hard thing to parse out. So if you have a client that has some sort of settlement like this, you want to get to work on differentiating what money was for what. What part of the settlement was for property damage compared to injury, compared to medical expenses, and so on and so forth. You want to have that breakdown, because if there's just, I got this one big settlement check and I can't show you which part of that is for lost wages, that's obviously going to create an issue for your client in calculating their income. Gambling income counts as income. It's in the statute. And same kind of rules with taxes. You can count the losses to the extent you count the income, right? Bonuses, a lot of people get either a yearly bonus or even a quarterly bonus. We want to make sure we're averaging those numbers out over time. So if every year someone gets some huge bonus in December, we're going to take their whole year average and we're going to average out that bonus, but that absolutely counts as part of their income. So a party can't just say, oh, but that was only a one-time, I just got a bonus that one particular time. It still counts. It's just that it's going to be averaged out over the appropriate period of time. Spousal support is going to count as income for purposes of calculating child support. So if someone's already receiving spousal support, their child support is going to be lower as a result because they're already receiving that other support. If you have a low income party, the court has the ability to use sole guidelines instead of shared guidelines if they find it to be financially appropriate. So if somebody's under that 150% of the poverty level, you might be dealing with a slight deviation from the guidelines, in that they're going to get the benefit of using the sole formula as opposed to the shared formula. Okay, so let's talk about some discovery best practices. The type of discovery that you're doing is going to differ depending on what court you're in. So you might be using subpoenas, you might be using written questions, you might need to request authorization from the court. It's all going to depend a little bit on which jurisdiction you're in. But these are some of the forms that you want to make sure that you get. If you have somebody that's self-employed, you want to ask for all of their tax returns, including all attachments. So if they're getting some huge amount of money in, but then they're paying one particular vendor some huge amount of money out. We want to know who that vendor is, what's going on with that relationship. So I had a case one time where the man was self-employed and he had this business that was bringing in like $600,000 a year, looked really successful on paper. But then he was paying out like $599,999. And one of his vendors was his boss that he also worked for on a W-2 basis. So the whole thing just went in a really big circle, and it was very, very odd. But if we had just looked at the tax return itself, I would have seen top line number, bottom line number, okay. But getting the vendor summary and figuring out who are these people that are getting paid, is the business owner using the business account as basically their personal account, and they're paying for all sorts of services and things that maybe are not legitimate business expenses. I had another case where the woman worked from home and she hired her boyfriend to remodel her house and build her a new home office. So she had paid him, thousands and thousands of dollars under the guise of, creating this office space. And she did like an online marketing business or something like that. There was really no basis for it. But again, reasonableness of the particular expense and who it's going to, who is the vendor. So if I'm going through that vendor summary and I see Joe Smith, who's Joe Smith and what's he doing? And, why are we paying him tens of thousands of dollars? Profit and loss statements, again, you're going to catch whatever those big categories of expenses are. They're paying tons and tons in marketing, but it doesn't seem to be generating any revenue. Where's the money going? And then the balance sheet. So is the business holding on to some huge asset somewhere? Are they just holding on to money or holding on to assets and they have access to funds, but are for some reason not reporting income or, doing something else that's maybe not quite on the up and up. A lot of self-employed people will try to avoid filing their taxes. I've got a child support case coming. I'm just not going to file my taxes for the next 5 years. Well, there's still going to be some sort of financial records out there. And so getting access to profit and loss statements, vendor summaries, balance sheets, all of those things are still available, even if they haven't necessarily filed their tax return yet. You can still put together, what exactly they're making. You can also request the bank statements and figure out how many dollars are going into their business bank account. And that's all we really need, right? We need that top line number. What is the business bringing in every year? And then, it's up to them to prove the legitimacy of all of their miscellaneous expenses. Childcare. Sometimes folks will hire like grandma to be the babysitter, and I'm going to pay grandma $1,000 a week because she's just wonderful and I love her. That's not always going to fly, and that's not obviously always going to be legitimate. We need to have proof that the payment is actually happening. So there should be some sort of a check, some sort of an outgoing bank transaction. There can be a Venmo receipt or PayPal. We have to show that money is actually changing hands in order for this to be a legitimate expense. The other thing to know is that if there's a comparable, licensed, good childcare in the area for significantly cheaper, the court's not going to say that your arrangement is legitimate. So if I could legitimately go out and pay $500 a week for childcare that's all licensed and bonded and insured and wonderful, and it's within range of my house, court's going to say, we're not giving you $1,000 a week for grandma, even though we love her. Expenses that are being paid for. So this comes up a lot when you have parties that have gotten either remarried or they're in a new relationship. And there's a concern, oh, well, is my new spouse's income going to be taken into consideration? Not really. We're not going to necessarily go after the spouse's, W-2, whatever they're receiving. But if you have someone who is paying your expenses, that can be considered a form of income. So if I'm able to live completely rent-free, mortgage-free, don't pay any utilities, don't pay for anything, well, that's a form of income. Someone is paying my expenses on my behalf. So I had a case a number of years ago where the man had been a bartender for a number of years and then decided to be a realtor, ended up moving in with his mom, or moving into his mom's house. And his mom was paying the mortgage, paying the utilities, paying for everything. And he tried to sit there and throw his hands in the air and say, I don't make any money. Well, we had all kinds of problems with that, right? Why are you still in this industry? You could be making what you were making as a bartender at least. And you're having all of these expenses paid for on your behalf. And so we were able to impute a good chunk of income to him. So he was paying legitimate child support. Okay, so this is a form that we want to be putting in our clients' hands kind of right out of the gate. We want to have an understanding of their finances, whether it's a divorce case, whether it's a support case, because if they're filling it in the day before court and there's a problem, right, then we don't have a whole lot of time to address it. So figuring out what the income and expenses are for our client and making sure that it all kind of lines up and is legitimate. This is also just a good exercise for the client to go through because they might be starting a whole new life, right? If they're just getting divorced and they're like, I don't really know what's going on with the finances, and now I have to set up my own place and, you know, figure out all of my budget and everything, this can actually be a helpful exercise for them. Big things that the court is going to jump on. So we talked a little bit about the required retirement piece. So you'll see that up in the top right corner. You have your average gross pay, and then there's the required retirement. Make sure it's actually mandatory. Make sure you have the documentation to back that up. But the big things that the court is going to jump on here is if you have like new clothing expenses, the personal care, personal grooming expenses. If your client comes in and says, oh, I pay, you know, $1,000 a month for my personal grooming and things are so bad, it's just not going to be very sympathetic. So you want to make sure that these things are all legitimate and relatively in line. Another big one is like entertainment. That one will jump out as at a judge if it's a little bit out of whack. But everything else on here is going to be relatively straightforward. Now, if your client is not actually paying for the thing, they shouldn't be listing it on their income and expense sheet. So if they're not the one paying the mortgage, then it doesn't go on their income and expense sheet. If they're not the one actually paying the gas bill or the cable bill or whatever. So that's one thing to be aware of. And you might have multiple versions of this, right? So if I'm going to be the one that's responsible for paying these things, then this is what my income expense sheet looks like. And if I'm not, then this is what it looks like. So you might have a couple of different versions for that reason. But this is also in discovery, you want to be asking the other side for their income and expense sheet and jumping on anything that looks like it's out of whack. All right, other factors in child support. So going into child support cases, it's tempting to say, oh, it's so easy. You just plug in the numbers to the calculator, right? And then you're done. Well, all of these things are going to move the needle just enough that everyone's going to disagree. If we gave 10 attorneys the same set of facts and said, go plug it into the formula and see what you get, we're going to have 10 different numbers because all of these little factors that come into play. So health insurance, you can account for the child's share only. And what that means is usually we have to do some backwards math. So if we know what the client is paying every month, they've got like a family plan that covers their spouse and their 3 kids. We know what that amount is. Well, now we need to get the breakdown from the employer that shows if it were just me, what would it be? If it were just me and my spouse, what would it be? If it were just me and a child, you know, what would it be? And then we can back our way into how much is that one child's share of that particular monthly expense. A lot of the time, this is going to be given to us in a biweekly format. The easiest way to deal with that, you take your biweekly figure, multiply it by 26 to get the annual, divide it by 12. That's how you get your monthly figure. Again, this is an area where you'll have all kinds of different results because people try to get at the monthly number a different way. They'll take the biweekly figure and break it down to weekly and then multiply it back out. They'll take a weekly figure and multiply it by 4.3 to try and get to the monthly. And so everybody's figures just end up being a little bit off. Best practice to me is you take it out to the annual and then divide it back down. That's going to be the most accurate every time. There's also credit for dental and vision if it's being provided, of course. And for all of these things, let's say I'm now married to a new person, right? And they're the ones that are providing the health insurance for the child. That's still going to be factored in to your child support calculations. So the statute says new spouse's insurance for the child is still a deduction. All right, childcare. It has to be work-related childcare. So a stay-at-home parent that sends their kid to summer camp just for the experience and for fun and for all of the other wonderful things, they're not going to be able to count that as being a valid childcare expense. It has to be a work-related childcare expense. So some of the expenses I've seen, I mean, if they're out of school for summer and they're going to like karate camp, soccer camp, whatever it is, if it's during the work day and it allows the other parent to go to work, then it's valid childcare. Summer camp is obviously going to be more expensive than your regular everyday childcare expenses, or if you're doing before school, after school type of care. So in that case, you're going to take out the average over the past year, over the past 6 months, whatever it is. But that's the figure that should be used. Okay, make sure I got through my notes there. Okay, some other expenses that come into play. So the mom can be reimbursed for her pregnancy and birth medical expenses, so long as she files for support within 6 months of the child's birth. And it's something that not a lot of people go after, not a lot of people are aware of it. But if we have a situation with a younger baby, we want to make sure that we're asking for that. So any of her co-pays, any of her deductibles, any of her, just out-of-pocket stuff for the entirety of the pregnancy and the birth expenses, those are all going to be reimbursable in proportion to incomes, right? They're not going to make dad pay for 100% of it, but it'll be payable in some portion of the incomes. Unreimbursed medical and dental. So categorically, the court says certain things are reasonable and necessary unreimbursed medical and dental. And those include like eyeglasses, prescriptions, braces, all of those things are by default considered to be reasonable and necessary. You can definitely get into some arguments over whether a child needs braces or whether they need Invisalign or, whatever the necessity of that particular thing is. By and large, they're going to be considered a valid expense. As long as you're not going to the absolute most expensive place in town, the court's going to have those paid in proportion to gross incomes. Now, best practice here is to make sure there's deadlines. So if let's say mom and dad have to pay, 50% or whatever, then we need some if-thens. If I've incurred the expense, I'm going to provide you with the receipt within 10 days of paying it. And then you're going to provide payment to me within 30 days of me providing you that receipt. And that way I'm not going to sit on a whole pile of receipts and 10 years later say, guess what? You owe me $50,000 in unpaid medical bills, right? Or anything like that. And if I don't provide a receipt within that time frame, then I'm not going to be entitled to the reimbursement, right? So the parties will forego any sort of reimbursement, but they have to show a paid receipt, not just an invoice, not just some sort of bill. They have to show that they've actually paid it within a certain time frame, and then they're entitled to the reimbursement. Always a good idea to track paying those reimbursements. So again, we're looking for canceled checks, PayPal, Venmo, some sort of record to prove that you paid it. You don't want your clients to be paying for these things in cash. Again, only for the other side to claim, well, I never got the money. Had a case where both parties were servers at a bar, and at the end of the night, dad would kind of just hand mom some cash. Here you go. Here's your support for the day. No proof, right? On either end, there's no protection. So when she goes and claims, you've never paid me anything, he can't prove otherwise. When he says, no, I've been paying you $50 a day, we don't have anything to show to a judge. Other children are a deduction. So if you have primary custody of another child that lives in your house full time, you basically get a credit in the amount that you would be paying in support for that child, if that makes sense. So if I would owe $100 to support this child, now I get a credit for $100 for supporting this other child that's in my home. Another unreimbursed medical dental that comes up pretty frequently is like psychologists, therapists, mental health treating providers. Those are generally going to be considered reasonable and necessary by the court. I mean, it has to be something pretty outlandish for a judge to say, no, we're not, no more therapy for you. That's not going to happen. So arrears and divestiture. So I heard this the other day and my head almost just exploded off of my body. I heard a woman say, oh, my kid is, 15 and I'm going to wait till she's 17 and a half and then I'm going to go file for child support. Why? Don't do that. You've already lost 15 years of support. You can only get arrears back to the date that you actually file a petition. There has to be a petition with the court, and you can file it the day the child is born, if the hospital will let you out, but your support is only going to go back to the date that the petition started. You do have to have some due diligence. You can't just go in and claim, I have no idea where he is or anything like that. If you have a last known address, provide that. If you think that they're living with a friend or a family member or something like that, that's the best address to use. Of course, once you have an attorney, the attorney can help do some investigation and figure out where the person is. But we have seen some cases where someone filed, they claimed, I don't know where the other person lived. Well, we can show with some other records, of them being at the person's house or having a text message exchange, they knew exactly where the other person lived. And so those cases, you're not going to necessarily recover all of those arrears. You have to use due diligence, use a good address, be honest about it. Now, modification cases are a little bit different. So if you have a support order in place and you're going back to change it, then those arrears are going to date to when the other side gets served. So once they actually get notice that you've petitioned for the modification, that's when the clock starts running on support. So divestiture, this is something that happens in Virginia not infrequently. A case will start at the juvenile court level, and then later somebody files a divorce in the circuit court level and basically pulls that case upstairs. So your child support case is now part of the divorce case. We're still using that date of the initial filing. So as long as you did your due diligence and you used the right address and everything was legitimate, you still get that date that you very first filed the petition. If we've had a case pending for just a really long time for some sort of odd circumstances, right? We filed the petition and somehow it still hasn't been heard 5 years later. Well, now we have parties coming in that say, well, for the first 2 years, I earned minimum wage, and then I had this big spike in income, and then I lost my job, and then I got this, and then I got that. Well, the court can actually go back and calculate what they would have owed at the time of those particular earnings. And so unless they were doing something like quitting their job intentionally because they didn't want to pay support, they'll just be held to whatever earnings they were making at that particular time period. Kind of messy to go back and figure out who was earning what and during what time period and all of that. But I've had it, we can do it. It's just not always the cleanest. And, at some point there's going to be some sort of arrearage owed, most likely. So they're just trying to reduce the amount of those arrears most of the time. All right, how do we get away from the guidelines? Number one is by having really high income earners. So when you see these big time celebrity divorces and things like that, where the parties make millions of dollars every month, they're not going to be bound to follow the guidelines from the statute. Anything that's over a combined $10,000 per month. So if each party's earning $5,000 a month, we can go over and above the guidelines because these people just have a different standard of living, different standard of childcare, different, whatever. So we can always go over and above when we've got high earners. We talked earlier about if you have somebody who's below the poverty line, again, that can be a basis for a slight modification. We basically use the higher figure from the guidelines rather than the lower figure, give them a little additional financial relief. Other deviations that I've seen that have been successful, they're not usually successful because the court doesn't really want to take a lot of evidence on child support cases. They just want to focus on the numbers and keep it at that. Actual support paid for other family members. So I had a client whose aging parents were living in the house with him. He showed they're disabled, I'm providing them with care, and so we were able to get a little bit of a deduction for that. Cost of visitation travel. So if you have parties in multiple states and we're either flying or taking really long drives back and forth to facilitate visitation, that can be factored in as well. So if we've got the parties are already splitting the cost, or maybe one party is paying for all of that cost, that can be a basis to lower the child support obligation. Imputation is a huge one. So any sort of voluntary unemployment or underemployment means that the court can basically hold you to your old income. So if I had a job where I was making $100,000 a year, and then I found out I was going to have to pay support, and I said, I don't want to do this anymore, I'm going to go work at McDonald's. Court's going to call that voluntary underemployment. Or, if I just completely quit my job, then that's voluntary unemployment. Even a termination for cause. So just causing problems in the office or not doing what you're supposed to be doing and you end up getting terminated, the court says, well, that's your fault, right? You could have been earning this much money, but for your actions. And so we're going to hold you to that level of income. You may have to involve a vocational expert in order to prove that there are jobs available that pay that much money, that this person's qualified for, but not necessarily. So a lot of the case law says you can just use their earning history and you can show like current job postings. I could go on Indeed or LinkedIn or something like that and say, look, there's plenty of engineer positions available and this is the salary range. And then this is their earnings history. The earnings history is really the high point, I guess, for the court. That's what they really want to look to. But if you can show like there's been some huge downturn in the economy, there's no positions like this available, my company downsized, something like that, you may get away from an imputation argument that way. The judge has to be able to put a dollar figure on it. So it's not enough to go in and say they could be making more. They could be making more by how much? They are making $50,000 and they could be making $100,000. Okay, now let's talk about how we've documented what they could be making. Are we looking at job posts? Are we looking at an earnings history? What exactly are we basing that on? But you have to have some sort of solid foundation for a number. Judges don't like to work without numbers. If it's just more, I don't know what to do with more. Give me a number. Childcare costs. So if you have a custodial parent who's going back to school, and if going back to school is going to improve their earning capacity, then they can get childcare costs included as well, even though it's not necessarily work-related childcare costs. So there's a little bit more proof here than you would expect. So I had a client that was going back to school. She was just going back to like community college. She really never had an education. So you can't, she's going back to school. Obviously, she's trying to make more money, but the judge really wanted a lot of evidence on how much is this going to improve her earning capacity? What sort of field is she going to be going into? What can she expect to be making when she's going to be done with this program? So you do have to have a little bit more proof than you would probably expect. So you'll want to show they're going into, the nursing field, and nurses make on average this much in our area, and she's going to graduate at this particular time. And here's what she was making before she went back to school. That's how you want to present that one out. Special needs. This comes up for us a lot. So anytime you have a child that needs something over and above or different by way of therapies or medical care, or they need certain structural modifications to their living area, they need wheelchair access or something like that, that's something that the court can also factor in. So the way that it comes up mostly is the additional medical expenses, because oftentimes these families are coming out of pocket pretty significantly for a lot of the therapies and programs that the children are involved in. And so that will be factored in as well. And we might not necessarily follow the same income shares. It might just be higher on one party compared to the other, or they might reduce the child support obligation because the out-of-pocket medical is so high. Property division can be factored in. If you're in, at the juvenile court level dealing with a child support case, the court is like, we don't want to think about property. I don't want to hear the word property. But if it's income generating property, that's really what you're looking for. So if the parties got divorced, one person was awarded, the property that they now rent out as an Airbnb or something like that, they're generating income from that property. That's something that the court will consider. So now this person may not have a regular W-2 salary or something like that, but they do have some sort of regular income, and they have assets that can produce more income. So that's really what you're looking for there. All right, so some of the cases that some of the frequent flyer cases that you'll hear about in a lot of these arguments. Herring versus Herring is the Virginia case that says the court can deviate from the guidelines, and there has to be some sort of explanation in writing for the deviation. So the judge can't just do your typical support order and say, we feel like deviation is a good thing in this situation. There has to be some sort of strong basis for it. And if on the flip side, if you disagree with the deviation, the court doesn't specify the reasons for it, that's going to be a really great basis for an appeal. Antonelli versus Antonelli. So this is a case where dad, I don't remember what industry he was in, but he had a good job, right? And then he decided to leave that job and go start some new venture that he thought was going to be more fruitful for whatever reason. And the court basically said the risk that dad is taking is on him. It's not on the kids. So if you decide you want to quit your day job and you want to go pick up real estate or something like that, that's fine. But we're going to hold you to your old income, because that's what the kids deserve. The kids don't deserve to bear the brunt of your, of you deciding to move positions. Paul versus Paul, this is the case that says parties are going to be bound by their agreements. So if we write something up on a Post-it note, I agree to no spousal support ever, and I sign it, I'm going to be stuck with that, unfortunately. Ibsen versus Moxley. So this is a situation where we had a juvenile case filed, then we separately had a divorce case filed, which brought that case upstairs, right? But there was a previous court order here. And then when the circuit court case was non-suited or dismissed, it went back to having the juvenile court order in place. So you don't wash away all of your previous child support orders by filing for divorce, dragging them upstairs, and then saying, never mind, I changed my mind. You're not going to get out of your support obligation that way. Okay. So I'm looking at the chat here for a couple questions. Can you address accrued vacation that shows on the paycheck? So I would want, I think, a little more detail on the employment agreement there. Some companies will actually pay you, if you accrue a whole bunch of PTO and you never use it, then when you leave that company, you might be entitled to payment for that. I think in that case, it definitely would be a form of income. Absent that, though, I mean, if you quit and it just goes away, or leave jobs and it just goes away, disappears, I don't think that's going to be factored in as income, because I don't know how you would put a dollar amount on it. And judges like numbers. They don't like what ifs. They don't like mores. They don't like, anything that's broad and general like that. Military housing allowance, absolutely, that will be considered. And you'll see a good number of people that are getting more in their housing allowance than what they maybe should be getting because of their family size or, something like that that's going on. But that, because there is a dollar amount, I can get an LES and I can see this guy's getting $5,000 a month in housing allowance. Yes, I can absolutely include that in income. Homeowners insurance, yes. Homeowners insurance is usually wrapped up in the mortgage payment, so we do want to have that broken out as much as we possibly can. And it's just like the health insurance breakdown. Like, we just have to have the figures to see what the breakdown is. Is $10 a month insurance? Is it $1,000 a month? What actually is that breakdown? All right, taxes and life insurance. So the dependency exemption is going to depend on the custodial arrangement. So whichever parent has primary custody is probably going to be the one that gets the tax deduction. If we have shared custody or split custody or something like that, then that's going to make it different. Shared custody, if you have more of a true 50-50 split, then what they'll do is alternate years. So this year I claim the child, next year you claim the child, and we go back and forth until they're 18. Life insurance is a great thing, and it can be ordered to be maintained on behalf of the children. And one thing I love to include is that there has to be a trust established for the benefit of the kids, and those life insurance proceeds are going to be paid into that trust. And that way we've got some sort of little nest egg for the kids. We're making sure that we're setting up for their future. Now, the court cannot order someone to purchase life insurance. They can only order that it be maintained. So if they already have it, they can order that they keep it. But I can't direct you to just go out on the market and purchase life insurance. All right, spousal support. So an important distinction off the top is support as compared to separate maintenance. A separate maintenance is a whole different lawsuit in Virginia, and there's no divorce tied to it. This is purely just, I'm going to be destitute if I don't start getting some sort of maintenance in order to support me and my lifestyle. So you can have two different lawsuits in that way. The guidelines for spousal support in Virginia, our guidelines are only meant to be used on a temporary basis. They are not meant to be used for permanent support awards, but judges like numbers. So there's still going to be a guiding post in the court making a decision. Again, we've got that $10,000 monthly amount. So anything over and above that, then we're really not using the guidelines whatsoever. The code section in 20-107.1 says that the court can award either a lump sum, periodic payments, or any combination. So the court can say you owe $10,000 the first month, then we're doing $1,000 a month for the next year. Then we go down to $500 a month, whatever, or then you owe some other lump sum amount. So the court can really structure it any which way. Most of the time, they're just going to do a monthly amount. It's going to be X amount of dollars per month for whatever the term is. And they're not necessarily going to mess around with lump sum payments or anything like that. A good basis for a lump sum payment would be, of course, arrears. Someone owes, a whole year's worth of arrears. I want those paid in a lump sum. And then we can go to a regular payment schedule or something like that. If we're doing an agreement, again, you can move these numbers around any which way works for your client. If you have a client that's trying to qualify for a mortgage, those periodic payments are going to be more beneficial. If you have a client that doesn't really particularly care, then maybe we want an upfront lump sum payment so we don't have to worry about the other spouse losing their job or becoming disabled or something else happening that's uncertain in the future. Spousal support, again, it's going to start at the date that you first file any sort of petition. So a juvenile court petition or a divorce case, something has to be filed in order for the clock to start running. If you wait and don't file for 6 months because you feel like, oh, we can probably reach an agreement, then you're going to be out those 6 months of support. So we really want to get into court as quickly as we possibly can when support's at issue. Now, this one's an interesting one because the rule only relates to a reservation of support, but everybody applies it as though this is the rule all the time. So if we have a 20-year marriage, go in for a divorce and say, court, we just can't deal with spousal support for whatever reason right now. Well, the court can order that the support case be reserved, and that reservation lasts for half the duration of the marriage. 20-year marriage, I've got a 10-year reservation. But what attorneys have taken this to mean is that if I have a 20-year marriage, I'm only getting 10 years worth of support, and that's not the case. Case law is really all over the place, and it's going to depend on all the factors that we'll get into. But I've seen marriages as short as 14 years with lifetime support awarded. So you are not bound by this half the duration of the marriage thing. Although it's pretty typical, it's an argument that's raised frequently. That's not actually what the rule says. Someone just read it and thought that sounds good, and then they tried to apply it. So some of the factors that are going to play in under 20-107.1. Grounds for divorce, really the only relevant one is adultery. And adultery is a bar to the receipt of support. And that's it. And that's usually why adultery is raised in a case. If someone thinks that they will be on the hook for some spousal support, they're probably going to be pursuing that adultery claim. Otherwise, because it's so difficult to prove, we're not necessarily going to be going after that in every case. The obligations and financial needs of the parties, and then the standard of living. So this is your, big time celebrity couples making millions and millions of dollars a year. I require at least $200,000 a month just for my, Botox and cosmetic surgeries. That's where those sorts of things play in. So it's whatever they were doing during the marriage, court's going to pretty much hold them to it because this was the standard that you set. So if this is what they're used to and this is what they're used to paying for, you're probably going to be on the hook for it. Duration of the marriage, the longer the marriage, the more likely and the higher the support is going to be. Age and physical and mental condition of the parties, and if there's special needs of a child. So if you have a special needs child, probably one parent has had to be at home or substantially be at home. And so that's one thing to really be aware of in those cases. Property interests, earning capacity, and then the decisions made during the marriage. So we hear this a lot that, oh, well, I never agreed for them to stay at home. I always wanted them to work. Well, it's been 20 years. And, even though you didn't agree, technically you did because you stayed married for the last 20 years with the person that wasn't working. So something to just be clear about from the get-go. If it's been the standard during the marriage, it's probably going to continue at least for some time period. And then the date of separation. So if we've been separated for 5 years and I haven't asked for a dime of support, somehow I'm getting by, right? And so that's going to chip away at that spousal support claim. If you can show the other party is clearly able to be self-supporting, they've been living on their own, not asking me for anything, obviously they're doing okay. So this is just some of your code sections for juvenile court as compared to circuit court. Gives you some of the bases for temporary support, both in juvenile and in circuit. And then for final spousal support, even at the juvenile court level. So some other considerations in spousal support cases, both court levels can consider the attorney's fees. It's just that the arguments are slightly different. So in juvenile court, it's more about the financial abilities of the parties and the overall equities of the case. And then up in circuit court, you can award attorney's fees to enable someone to continue with representation. So someone who really doesn't have access to money while the case is pending, we want everyone to have access to attorneys so we can ask for a lump sum award up front to enable them to carry on with the lawsuit. If there's a protective order in place, that is also a basis to get some sort of temporary support. So the court can order, pursuant to a preliminary or permanent protective order, that there also be some support, some payment of utilities, payment of a cell phone bill, payment of a mortgage. Those sorts of things can all be awarded as part of that. In cases that are remanded, That's your statutory basis. And then any sort of agreement. So again, I've signed a Post-it note that says I never want any spousal support ever. I'm going to be bound to that agreement. Temporary support, there's no consideration for the factors when you're going in on a temporary hearing. The only thing is there a need and what do the guidelines say? So courts limited you to at least 30 minutes for this motion. If you've got parties that are living in the same house, it's going to be much harder to establish a need if someone's expenses are being paid for them. So if the mortgage is being paid, the utilities are being paid, groceries are being bought, how can I really show a need? Non-conforming payments can be credited against support. So if someone has to pay $2,000 a month in support, but $1,000 of it is going towards the mortgage, that can count. It can be credited. So make sure that everybody's getting credit wherever it's due. Okay. I don't know if it's Cicerelli, Ciccarelli. I hate this case. Wife moved out of the house, moved in with her boyfriend, and got spousal support. Oh my goodness. My stars, I can't take it. But it's not a bar because we're not factoring in any of the factors on temporary support. So the best thing to do in a situation like that is get your trial date set as soon as you possibly physically can. That is a run to the courthouse, don't walk situation. Spousal support agreements, they're much more contractual than child support agreements. So if you write an agreement that says this is not modifiable, that's it. It's not modifiable. You cannot go back to court and say, sorry, I lost my job. Sorry, I got disabled, I got injured, whatever. You're going to be bound to that agreement and whatever it says. Retirement can factor in. The court says, yes, eventually you can retire. But if you have parties that are getting close to retirement age anyway, we want to try to account for that in the spousal support award. So either doing a lump sum or having a step down at retirement, something like that. So some practice tips here. Do your discovery. Make sure that you know about all of the prior earnings, previous bonuses, retirement contributions, voluntary, non-voluntary assets that are out there. Run multiple sets of guidelines. So if everything goes our way, this is the guideline. If everything goes according to the other side's arguments, this is how it would go. And then here's somewhere in the middle, because I think the judge will probably accept our argument here and their argument there. And so you're probably going to have 2 or 3 sets. You're going to have a pretty wide range of what the support outcome should be, but that way your client knows what to expect. They know what their bottom line is, they know what their top line is, and they know that the result is probably going to be somewhere in the middle. Offer stipulations. I love a good stipulation. And this is probably a little bit small, but this is an example. So if we can agree to what one party's income is, what the child support or what the healthcare amount is, what the child care amount is, we can go ahead and fill in all the blanks for the judge on those numbers. So now the only thing we're here to argue about is mom's self-employment income, right? And I can present a whole 2-hour trial just on our one issue and we can ignore all the rest of it. So we even had the number of days in here. We had the amount that had been paid while the case was pending. All of these things, we're just checking them off the judge's list. One less thing for the court to decide. So court order best practices, make sure you have all of your statutory notices, the monthly obligation, the start date, any arrears owed or payments made over the course of the case. The unreimbursed medical, we talked about, I've got 10 days to give you the receipt. You've got 30 days to pay me. All of that timing needs to be laid out. The travel cost, who's paying and when. So if I have a child that has to get on an airplane and fly back and forth, when do the flights have to be booked? By who? How many dollars? All of that. Tax credits, are we going to alternate? Does one person get it every year? Did someone already claim them for last year? You know, make sure we're accounting for all of that. And then how are we dealing with future modification? And how are we remanding it to the juvenile court going forward? All right, so I have exactly 2 minutes left for questions. There's so much to talk about with support cases. I mean, there's so much more we could even get into. So if you want to hear about any of these like subtopics, or if there's another topic that this brought up in your brain, let me know. We're putting these on for you guys. So whatever you want to hear about, learn about, do some case studies on, I'm here for it. All right. 12:59.
What about, I do.
Yeah.
Can you hear?
Yeah.
What about people who have assets outside of the country that and they're earning income from it and all of that kind of thing?
Yeah, that's going to be difficult. I mean, you might have to involve someone who is out of the country. You might have to hire like another attorney, or a forensic accountant or someone like that. I mean, that to me sounds like we're going to need an expert, someone over and above just your attorney who can figure out what the dollar value is and what the income is that's being generated off of those assets.
I'm using this temporary, sorry, Pena de Lite temporary spousal support guidelines. Yes, they're not supposed to be used at final trial, but
Right.
as you said, the judges do, and they have, in my cases, used them as like a stepping stone here.
Yep.
When is it reversible error? Do they have to say specifically, look, I am using this number? Or I had one say, well, look, that was the status quo established. We're just going to keep it around that number. That's getting pretty close, in my opinion. So,
I mean, the judge has to make findings under all of those factors. I would say it's reversible error if they're not giving a basis for it. If their only basis is, well, this is PL and it seems to be working out, they're not making findings under earning capacity, age, status, all of those things that they need to be making findings under. So I would say that makes it reversible error. And you definitely have judges that will kind of stick close to the number, and then oddly their findings just happen to line up. It's so weird how this works out, but I think if they've listed out the basis for it, they're probably gonna withstand an appeal on that.
thank you.
Okay. All right. Well, thanks, guys. Enjoy the rest of your Friday and let me know what you want to hear about next time. Okay.